In this video, we are going to be analyzing micromobility, ticker MCOM, which is basically just the old HLBZ. Now, wanted to point out some key things, and for this, we will really probably just go straight over to the standard deviation charts. Now, obviously, what it kind of did was a rebranding and basically a reverse stock split all in one, because they were under the $1 NASDAQ listing. So no matter what, they would have had to do a reverse stock split to be able to stay listed, but at the same time, they have done a rebranding. We can see this hasn't really done anything good for the company, because near enough instantly, they've already come back down to, well, 65 cents, which is obviously below that $1 threshold. So again, they're going to face that same delisting. But what is really bad about it is obviously the stock was already down about 95% on the year. And what's happened now, they've opened up around that $5 and it's fallen another 85%. And that's why really I never buy these stocks that are down 80, 90%, but only because they've fallen 90% doesn't mean they can't fall another 90%. Most of the time they do, because look at the overall trend. They're always weak, they stay weak. So definitely not something I'm paying attention to long bias at all. But what I would be paying attention to is when we come into these deviation levels, if we do get a temporary bounce, which we can see kind of since it's left the name of HLBZ and gone under MCOM, we're not really getting these pops as much as we used to. But if we do get one, then I am paying attention to around the $1.13 to around $1.16 level, which is going to be our first deviation on both the 6-month and the 1 year. So if we are able to pop all the way to that level, basically looking here, and then looking to play that short. And again, obviously locking in some profits in at that $1 key psychological level. So we would expect that to play as a support. And don't forget, sounds like a small move of, around 15 cents. But from a percentage standpoint, that's 15%, still a big trade opportunity. And then again, we can always hold some more and look to play it even more to the downside, which again, it most likely will do. So that's one thing to be paying attention to. Now, if you only like trading long bias, you don't like shorting stocks like this, or you kind of want confirmation that we're going to go further to the upside, what I would be paying attention to is, again, still paying attention to this same level, but instead we come back, we test it, we will most likely pull back the first time we test it. But if you are long bias, just wait for a break above this level, and then if we come back, test it as a support and it is able to hold, then we're most likely going to bounce and then play all the way to our next deviation level, which in this case would be the one on the right, the $1.84 to around $1.92. So those would be the key next resistances I'll be paying attention to if you only want to trade it long bias, obviously to that level. But for me, being a short bias trader, if I'm trading these kind of small caps which don't have the fundamental reason to really trade at long bias, then obviously if we did end up pushing further, then for me coming into this level, again looking to play that pullback the first time we come into that level, locking in profits along the way, probably at 175 going to be that first key layer that I start taking in profits. And if we continue lower, just looking in at psychological levels on the way down, which would be the 150, and then probably get out completely coming into this deviation level of around $1.15. So I hope you enjoyed the breakdown on MCOM. Let me know if you're trading it below, and if you enjoyed the video, why not drop a like and subscribe and check out this analysis video.